Zach's Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zach's Rank Buys. An oil and gas explorer and a manufacturer top this week's list of value stock picks. And Tracey Ryniec is back with us once again to fill us in on these two companies that she finds very interesting, to say the least. So Energy Partners, EPL, is that oil and natural gas explorer.
Right.
And you've been looking at this group for a while.
I have. I haven't covered these guys. They're small cap. They are mainly off the coast of Louisiana. They have been buying up some of the lower, shallower shelf properties off of a couple of the other bigger oil companies. So they've been expanding production that way. But the story looks good for them because they're about 97% of the crude oil and only 3% of the natural gas. And the crude oil prices have remained, really elevated, especially compared to last year. And the natural gas is, really depressed, but they're not being affected so much. So in the third quarter, they had revenue that was, up big compared to last year. It was their volumes were up 44%, as well as their average realized prices. So that pushed up their sales. The story looks good because they're increasing production with these recent buys. And as long as we have crude around $100, they should be, and getting it out of the ground, they should be pretty well off here. You can see from the estimates that the analysts all like the story here because of the elevated crude prices. And, estimates are really jumping for this year over last year. They only made 25 cents a year ago. So, these are big gains that should be holding steady as long as the crude prices stay high.
Yeah, and am I hearing talk correctly that that crude price might be backing off a little bit?
It's been kind of hovering right around the 100. It does depend partially on what's going on in the Persian Gulf right now.
Yeah.
So if you see some big event or non-event in the Persian Gulf, it might pull back a bit. But even if it stays above, 85 or around 90, that's still pretty elevated prices for this kind of company. Can still be, making quite a nice, profit and that kind of thing here.
Okay, so if there were a major event in the Persian Gulf, would that make these types of players less attractive then?
Well, it depends on the event.
Oh, okay.
If it actually pushes up the crude price higher because they, block the Strait of Hormuz or whatever is going to happen,
right,
then this kind of company will see, it's better for them because the crude prices, as that goes up, that'll be better for them.
Interesting.
But like I said, their benefit is that they're getting mainly the crude out of the ground, not so much the natural gas, which is hurting some of their competitors who are more, heavily weighted in the nat gas area.
Okay.
The chart looks kind of interesting. They really sold off in the summer because people were getting nervous and crude prices had fallen a bit over the summer. It has rebounded a bit, but it's still really cheap here. It's only trading a little under 9 times. So people, aren't really in the energy sector right now. They're not, investors aren't really focusing on it. So you can pick up some decent bargains here.
All right, and then the Greenbrier Companies is that other company, that manufacturer that you've written about recently, manufacturer of new railroad freight cars.
Right.
So what is this telling us about what's going on with the economy?
A good story, actually. The rail car manufacturers are in a good place because that kind of goes in cycles. And during the recession, they weren't building many rail cars because they didn't need to. And now they are. And now their customers are all buying again, and they don't have enough. So they have a huge backlog. This company actually has over 13,000 freight car backlog heading into this year, which is a little over $1 billion. So the analysts all look at that and they see, there's this backlog. It's kind of a sure thing. I mean, some of that backlog could go away if market conditions change, but for right now, they have the orders online. So, they have this big backlog. That's all going to be coming into them. So that's a really good story to have for a company like this. And actually, interestingly, one of the big customers really feeling a lot of the demand is the energy sector because they use a lot of railroad transportation, especially up in the Dakotas and in the shale regions. So that's also spurring them on. It's all connected.
Yeah.
The estimates are really interesting. They're supposed to see a 264% earnings increase this year because of this big backlog backlog, and they have ramped up production at several of their factories and are rehiring people that they had kind of just furloughed during the downtimes. So things all look good for them. The chart is also interesting. They had the big sell-off, like we've seen with just almost everybody over last summer. It has rebounded a bit, but they also are pretty cheap here, trading at just around 10 times earnings. And like I said, the story for sure in 2012 is good. The analysts like 2013, but that's, you know, a whole nother year away almost. So we'll kind of see what happens with the backlog. But for right now, there is definitely demand for the rail cars.
Okay, do you own either of these two?
I do not.
All right, check out other Zacks Rank By stock pick ideas for yourself on our homepage, Zacks.com. If you're not there already watching this video, we put 4 new stock pick ideas up there for you daily, one in each of the investing categories that is written about on the website. With Tracey Ryniec, I'm Terry Ruffalo.